They say markets open lower today.
Bitcoin has a very specific habit, and it's not subtle. It spends months climbing like a demonic mountain goat, hits a new high, then violently throws half the tourists off a cliff. A clean, spiritually cleansing 40 to 50% plunge. The kind of drop that makes your group chat go silent and your mom texts you, "Are you still doing that internet coin thing?" And then, with the enthusiasm of a sociopath returning to the scene, it gets up, wipes the blood off its mouth, and goes on to make new all-time highs anyway. Bitcoin is engineered to punish emotional decision making, and most of the market is an emotional support animal with a Robinhood account. Today we'll be talking about classic mid-cycle resets, forced liquidations, leverage getting incinerated, tourists discovering the concept of risk, and long-term holders quietly accumulating like they're stocking a bunker before the lights go out. We're not doing technical analysis today, kids. We're doing a defined historical pattern with rules, like a civilized predator. A 40 to 50% correction is any distinct drawdown event where price falls from a running cycle peak to a trough. Peak, the running high. Trough, the day the drawdown hits its deepest point. Forward returns measured from the trough at 30, 90, 180, and 365 days. Clean daily closes, verified, no clown math. Across 12 plus years of daily Bitcoin price history, you get roughly 9 distinct 40 to 50% correction events. And crucially, this bucket excludes the deep bear market nukes, the 70+% everyone is spiritually broken capitulations. Those recover slower. This 40 to 50% bucket is the shakeout, the tourists, and the weak hands bucket. It's the market's way of saying, thanks for the liquidity. Now go tweet about how Bitcoin failed. We'll call you when we need you to buy the top again. Here's the part where people usually start coping because the numbers are humiliating. If your strategy is panic sell, then re-enter at a higher price. 9 distinct events. Average multiple from trough to next cycle high. About 3.4x. Range. Roughly 1.8x to 5.6x. So yes, sometimes the rebound is only a double. Sometimes it's an entire new personality. One famous outlier mid-cycle correction in 2021 looked like a normal reset, then rolled into the 2022 bear. Even that one still went on to recover roughly plus 116% and tag a new all-time high shortly after the 365-day mark, which is terrible. Even the bad one still embarrassed the skeptics because the correction is positioning being forcibly reorganized. A 40 to 50% correction is the market doing a full body exorcism of over-leveraged longs, tourists who discovered Bitcoin last month, people who bought because their barber said this time it is different, funds that have to de-risk on schedule, and everyone who uses the word frothy like it is a real thought. What is left afterward? People who actually want the asset, can hold it, and can withstand volatility without turning into a drunk target wine mom. That is why these rebounds tend to be explosive. Historically, in this data set, every 40 to 50% correction has ultimately recovered to a new all-time high every time. That means the pattern is brutally consistent. Bitcoin only cares about its own cyclical structure and supply dynamics. And here is the part. The Bitcoin is too volatile to be taken seriously. People are going to hate. Drawdown severity appears to be decreasing with cycle maturation. 2018 had drawdowns around 84%. 2022 had drawdowns around 77%. This cycle's major drawdown is around 50%. The market is getting deeper, more institutional participation, more structural demand. The floor gets harder. This makes Bitcoin harder to kill. As of February 20th, 2026, Bitcoin is about $67,707, coming off the $124,700 peak from October 2025, putting the drawdown around 47 to 50%. That is basically the textbook trigger zone for this pattern historically. And early rebound behavior, like being roughly 8% off the February 5th low, lines up with how these post-trough periods often begin. The data set basically screams the same message repeatedly. When Bitcoin is down 40 to 50% from a cycle peak, it has historically been one of the highest conviction buying windows you can identify. The win rate is historically perfect in this bucket. The forward multiples are large. The time to recovery tends to be dramatically shorter than deep bear capitulations. History is on the side of the dip buyers, and history has been absolutely merciless to the people who wait for clarity, which is just cowardice.